Yes.
Yeah.
Did you tag me in it or no?
Let's do that now.
Oh yeah, my friend said she can see.
You see?
My friend said she could see.
Oh, awesome.
I don't know. I'm gonna go here back to the page. Opened up like the page like 16 times. Wow. Okay, now I do. I see. I mean, I don't see it like rotate, but
Good. All right. Well, we're on. I guess we can wait until some other people come on a little bit. Or maybe we can just get started, and we're recording anyway, so that's pretty good.
So anybody can jump in and see our gorgeous faces anyways.
That's right. That's right.
Yeah.
All right.
Perfect.
I don't know. I'm going to turn this on so we can see live video comments. I'm trying to do a whole bunch of things at the same time, and I don't really know how to do any of it. So
that's okay. That's okay. We're learning.
And I call myself a techie. Just stop saying that from now on. I should just stop telling folks that.
Oh, there we go. This is slightly better lighting, I think. I feel like I'm not as like, where were you on the night of the 14th?
Is this a deposition?
That's what I feel like.
Oh, okay. So let's see.
I know my friend Anna is out there watching. Thank you, Anna.
Hey, Anna. How are you?
She's an amazing Florida real estate agent, and she loves to have enough, like, all the knowledge she can for her clients, which is awesome and smart to do in this day and age.
Awesome. Yeah. You know what? I'm a co-host. I'm going to add you as a co-host. I don't know how to.
That's okay. We'll learn for next time.
Yeah, for next week. All right. I am here with Chris Rademacher. Chris is, she's actually a Virginia Beach native. Yes. She currently lives in Florida, but she is a mortgage loan officer here. She can write loans here and in Florida.
I'm not licensed yet in Virginia. We're working on that one. Not yet, but I know great contacts there to help. I just want to get the good education out there now for my fellow Floridians, as well as anybody in the whole United States that wants to reach in and find us, right?
Right.
You know, you're an amazing area for tourism, and people come to visit, and then they need to buy a second home there so they can come back year after year, and same here.
Right. So Chris has some unique experience, which is why I thought that it was always a good idea to have Chris on, because Chris and I worked at one of the largest foreclosure operations here in Virginia. They did massive amounts of foreclosures in Virginia, West Virginia, DC, Maryland, just a bunch of places. So Chris has experience in everything from loan origination to default servicing. And I thought that it was very prudent that we get some information from Chris on like the default servicing, the mortgage information, as it pertains to the CARES Act of 2020 that was just signed into law. So First of all, the part that we're going to be talking about today is going to be the mortgage piece of it. So most of us already know that on March 27th, President Trump signed into law the CARES Act, and the pieces that are pertinent and important to homeowners and people who are, and to give some information and some educational information to people who are looking to purchase. It particularly gives you information on foreclosure moratoriums are stopped during this period. But actually, I think they're stopped for, 60 days?
Yes, I think till June 1st, I think they're doing it now.
Yeah, and it gives you an opportunity, it gives you a right to forbearance for homeowners that are experiencing foreclosure hardships. So first of all, my first question I'm going to ask Chris is, Chris, what is a forbearance?
Yeah, a forbearance is a process that the servicers or investors, depending who owns your bank, who owns your loan, allows for you to cease payment for a time being. It is not forgiveness. You have to make sure that you really understand that. That does not mean that they just wipe it away and you keep going on and doing business. It will depend on who you have your loan through regarding how they want to handle that. And there are a couple options. Some are being super generous and adding it on at the end of your loan, which is great. And others are saying you have relief for 3 months and then it's going to balloon at the end, which could create a lot of further issues for you if you haven't gotten your finances back in place to make that full payment. Then you're going to have to start talking to them about other options such as a loan modification, or sadly, possibly a short sale, or even start heading into foreclosure.
So one of the important things that I just heard you say was that this is not a forgiveness. So there is a difference between a forbearance, a deferment, and a forgiveness.
Yes.
Can you tell us what the difference between the three are?
Yeah, so a deferment could be similar. It's kind of an interchangeable word along with forbearance. Typically you hear the word deferment more relating to like a student loan. That's the word they call it. But a forgiveness actually means that they say you can skip this time frame and they're not going to require you to ever pay it back. I have not really heard about anybody doing that. Personally, that may be something that may more be in line with a HELOC or a different type of mortgage product. The forbearance is what's on the big hot topic right now. And why this is so important, you understand your full options, is because you may not be able to buy or refinance for many, 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 many years. They are in discussions saying, you know, how long are we going to hold these to the typical short sale foreclosure standards, or are we going to allow for something different due to this? But as of right now, we do not know, and this could mean 3 to 5 years you are not allowed to buy or refinance. And so it may seem like a great option right now because you know you're getting that short-term relief, but what if we make this through in a very short time and something comes up next year or the year after that, and that's when you really need the money from your house that you've so earned and you can't get to it?
So one really important thing, and this is something that I always stress with people, if you can pay your mortgage, pay your mortgage.
Yes.
You want the protections under the CARES Act to be something that you really need and you have no other options but to do it. So because there are still a lot of questions that are unanswered. For example, you know, whether or not they're going to balloon all of them or whether or not you have other workout options available to you. Yeah. So right now the lenders are working out whether or not they want to tack on the payments to the end of the loan, whether or not all 3 payments or, you know, all 2 payments are going to be due when this is over. The implications to your credit. I think the CARES Act partially helps for your credit not to be affected during this time for missed payment.
I've seen on Facebook, I have not had anybody I've had pull this up yet, but according to some of the loan officers that have been posting some stuff and pulling credit, it is showing as a late already. on there, and that automatically excludes you from getting a mortgage at that point. You can't have any lates on a mortgage within 30 days for most programs. So again, it's really important that you talk to your local loan officer. If you do not know one, please reach out to me. Even if you know one and you're not sure if they're telling you correctly, I love to help everybody, even if I can't do your loan for you. And let's talk about your options. I've literally in the past week refinanced people to put 30K in their bank account, pay off debt, lower their rate, put them in a better spot. And you want to try to do this before it's too late, because I think what's happening is either people jump the gun before they really needed it, or they're waiting until it's too late and then trying to do something about it. And too late could mean you're furloughed from your job.
So this is another thing, that the mortgage relief that we're talking about in specific is available to people with government-backed mortgages.
Yes.
Can you tell us what a government-backed mortgage is?
Yes, and that's a great question, because not all loans are, and sometimes you don't realize until after the fact. I have a home in Virginia that is not mortgage, it is not government-backed. A home that is government-backed is going to be something that Fannie, Ginnie, Freddie, or FHA is guaranteeing. Basically, these programs have said, should the client go into default, we are going to pay you a portion, which is why you've heard about mortgage insurance, right? We know that on an FHA loan, and if you don't have 80% equity, you're paying mortgage insurance. And that is part, and then for VA, they have the upfront fee that is kind of like putting money into the piggy bank. So should you default? So that is something you do need to check with your servicing company to make sure, are you backed by one of these big guys or not?
Okay, that's a good thing. So, but if you do not have a federally backed mortgage, so first of all, Freddie Mac and Fannie Mae back about 70% of the loans that are maybe a little bit more of the loans that are written in the country. Right. So it might be it might be a very good chance that you do have a government-backed loan, but you always need to call your servicer. And your servicer is the person who you make your payments to. Yes. That's what it's called, a servicer. They are the person who take your payments, they report your late payments, they report your on-time payments. If you skip a payment, if they do everything for the lender, for the bank. So they're the person that you make your payments to. So make sure. And another thing is that none of this stuff even matters if you don't call them. It doesn't automatically kick in. You have to call your servicer.
You do. So my suggestion is, first, look local, talk to your loan officer, get with them, see what you can do in that route first. If there's nothing, because sometimes there isn't, you haven't lived in the home enough to have equity, you just might not be able to refinance, then your next call is to your servicer and check out what your options are, and then weigh them. And even after you talk to the loan officer, call. The refinance may not be the best option, but you want to have both choices when you go in, so you make the right decision, because it is going to sound amazing. You don't have to pay. What, 3 months, no payment? That sounds awesome. Woo! And then you don't realize at the end of it, when they call up the 3 months owed, you're like, oh shoot, I didn't get the time to save all that money to get me to this point. And then you're in a different pot of water.
Right. That's another reason why it's good that you actually call and make contact with your servicer, because if forbearance is the first option, like they're not going to automatically give you something else. Right. You have to call them and talk to them and work it out. They're not going to automatically say, you know what, let's just tack on this 3 payments. They're expecting, like, at the end of this 3 months, okay, give us the 3 months that you're behind. And then we don't even know, do we know whether or not if interest is going to still be running? And
that again, so here's the thing, there's not like a set guideline. The government has allowed the servicers to come up with what they need to do to survive. Some may offer no interest, some may not. I mean, again, you're going to have to call them specifically, because what your friend did may not work for you. And I don't care if your friend and you have the same mortgage company. What was given to them may not be given to you, because it could be based on a lot of different factors. I don't know them. They may look at your friend and say your friend is 2% away from not having mortgage insurance anymore in a better spot than you might be. So again, you don't want to rely on what your friends are doing. You want to call and get the news yourself.
There are, because, and again, there are other options that are available that you might have to work through and walk through with your servicer. For example, they could raise your payment a little bit each month so that instead of tacking, everything becoming due at the end of the 3 months, you pay a little bit more each month to get caught up. Or they could redo your mortgage, modify your mortgage, or there are a lot of different options. So it's important that you call and speak with your servicer. Get in contact with the mortgage lender first to see if you qualify for refinancing of your mortgage, anything that will help you before you take advantage of these other programs. And then if nothing else is available, then contact your servicer as soon as possible to work out options. The other thing is that, at this time, I know on the lending side, are you seeing an influx of people, with everybody that are looking to create loans for SBA loans, and the real estate market is still in a really stable place for us here?
Yeah, same in Florida. I mean, I'm thankfully very busy. I have a great amount of people shopping still. We're seeing a little bit less inventory. Some people got scared, don't want people coming into their homes, worried about how appraisals are going to get done and so forth. But excuse me, on that side, I mean, we are going strong down here. I think the media is hyping up a little bit and scaring people, which we need to just all relax, stay inside, take care of yourself, keep yourself healthy, and be ready to, come out of this even stronger than we are now. There's a lot of different fronts going on. A couple of questions I always get asked is what's happening with the rates. We have a bunch of things influencing that. Oil is, as well as COVID, and the servicing issue that is coming up because of the large numbers of forbearance requests. I heard that last week Caliber Mortgage alone, I think, got about 8,000 requests for forbearance. That's a lot for 1 week. So, rates are still great. You may not be seeing the same rate you might have gotten in January, but they're still really, they're in a good spot and still worth taking advantage of, especially to save your home. Because again, I can't stress to you, taking the short route up front may cost you way more at the end. And I'd hate for you not to be able to buy down the road when the rates stabilize more. They are predicting we're going to see lower rates at the end of the year, going into next year as well. Taking advantage of that because you panicked a little early and accepted that forbearance option, which I think is what a lot of Americans did. I think they pulled the trigger a little too early on that.
Which is to say that the servicer's telephone lines are ringing off the hook right now.
Yes.
You may not be able to get in contact
with them. For a job, I would call them. They probably are hiring people to work from home and take phone calls. So
you may not be able to get in contact with anyone. You might experience very long hold times. I would check your servicer's website to see if they have like an online option. Mm-hmm. I don't really recommend that. Really, I like a phone call because you want to be able to work out the other out. You want to ask questions. You want to fully understand what it is that you're getting yourself into. If ask questions, have a list of questions like what happens to your credit, what happens to your interest. Can you, is it all going to be due at the end of the forbearance period? Because you can forbear up to 180 days. But you want to know what other options they have instead of just taking a forbearance, especially, depending on your current situation or whatever your situation is going to be after we come out of this.
Yes.
So, Chris, what are some downfalls to doing the forbearance?
Right. Again, the biggest one is what is going to happen after we come out of this? I mean, the truth is, what if you have not saved up all that money because you were furloughed? And now you have to pay $6,500 at the end of 3 months. Are you going to be able to come up with that? And if you can't, what are going to be the steps? You may not qualify for the loan modification at the end. And then you could be honestly looking at a short sale or a foreclosure, depending on your financial situation. The longer picture is, will you be able to buy a new home down the road or refinance this home should you need something? I mean, you know, unfortunately, America is in the largest amount of debt it's probably ever been by consumers alone. You know, the amount of interest you're paying on those, I'm recommending to a lot of my clients, use your house to pay off your debt. I have a client that I'm working on right now. We literally are putting $20,000 in his pocket, paid off, I want to say like $50K worth of debt, and dropped his rate over half a point. He is in a 10 times far better spot just by using his home to help get him better. Now, the key is you got to stay in that great spot after I get you there, because if you go run up your debt again, you're going to be floating down the same river. But I mean, it's just, to me, not worth the risk of not being able to purchase. And again, we don't know if they're going to make people hold by the rules that are set in place right now, or are they going to come up with a different plan that maybe people can't buy for a year? They're going to make everybody prove that after 1 year afterwards, you know, you have done what you said you would do and got back on track, and then they'll let you buy. So we just have to sit here and wait, unfortunately. And I don't think the government honestly knows yet. I think when they rolled this out and said anybody can forbear, you don't have to really have a reason. I mean, because truthfully, you don't. You just call and ask for it, and they can't tell you no. I think they didn't realize that every American, or most Americans, were going to jump in on it and try to do it without even thinking about the consequences. They saw, you know, free money, so to speak, and ran with it. I also think at this point, I don't know that that's their biggest concern right now. I think their bigger concern is getting America back on track and people to their jobs, and then they'll figure that out afterwards. Unfortunately, the government may take longer than you need them to figure it out, and then what do you do? So. Right.
The other thing is, like, that was my concern, was that a lot of people were probably going to try to take advantage of it that didn't fully understand the implications, what it meant, or be able to ask the correct questions in order to get the answers, the specific answers that you need. Like I said, they're not offering right now. They're not just going to say, you know what, we're just going to modify your mortgage for you. And if you don't know to ask,
they won't. And I mean, it's not their job to ask the questions to you.
It's not. It's the consumer's job to ask the questions.
I mean, a lot of questions you need to ask if you're in a bankruptcy right now. Can you even take advantage of this program? What are your options? I have one person that I know of that's finished their bankruptcy. The trustee informed the mortgage company that the bankruptcy was over, and for some reason the paperwork did not make it there, and the mortgage company has them still sitting in a bankruptcy and will not help them.
Not only that, but what if your mortgage was behind before this happened? Like,
right, that could be another thing.
Mm-hmm. Exactly. Are you able to roll the payments from that was behind before into this? Right. You know, are you able to what happens before that? And then once this forbearance period is up, and you haven't asked the questions or called your servicer or made any attempts to you know, they don't know how to take advantage of the program, because you can't you just don't jump in it. It just doesn't.
Well, I think protecting your rights is going to be important, right? Did you attempt to call the mortgage company and try to help? They may look at that later on and say, okay, well, Susie Q did call us 5 times, did try to tell us she wasn't working, she couldn't make the payments, but unfortunately, based on whatever happened, that didn't work. She's back up and running and can make the payments. Okay, we're going to allow her to keep the house, and we're going to do this. If you just sit there idle and do nothing, and then at the end, you're sitting towards a foreclosure, they're going to look at your file history and say, you remember this. We had clients that would never reach out and do a thing. And banks don't feel sorry for those people. You didn't try to help yourself. The bank is not going to help you. You have to help yourself. Make sure that you write down the name to the person you spoke to and the date and time. If they'll send you a transcript, make sure, if you talk through them through like the website, make sure they send you an email with everything. Because again, at the end of the day, they're taking so many calls, they're not going to remember you from Tom, Dick, and Harry. And you want to say, I talked to Claire badge number 463 on this date, and this is what she told me. I wrote it down, look. And it's going to be harder for them to argue it.
And then the other thing is, like, you and I we saw a lot of this during the mortgage crisis in 2008. that's when Chris and I worked together in 2008, 2009, 2007, at the height of the recession and the mortgage fallout. And you remember how we used to see our foreclosure files from people who tried to apply for HAFTA and HAMP, and their applications were getting missed, or they didn't turn in all the right documents, or they said they spoke with someone and they lost track or something, and then all of a sudden they're facing foreclosure or something else. So it's important that, you know, you contact the people, that you follow up, that you keep detailed accounts of the information. Because right now the banks and the services, they're overrun. They're dealing with a lot of people calling right now.
Remember to talk to them. They are humans answering the phone. You know, they may be going through the same situation you are, trying to get their mortgages handled. Try to just keep calm and not get mad at them. You're going to get a lot farther with honey than, you know, sourness. And, you know, just be prepared. Have your mortgage statement in front. Tell them the dates you got off, you know, or say, hey, my company is off now, but they're saying we're coming back on this date, you know, and just have your facts and stick to them. And I think you're going to get pretty far with them. But again, your first step is always talk to a licensed mortgage loan officer. If you do not know one, my number is 757-450-0052. You can get it from Sherry as well. Call me. I will help you find one. I have friends throughout the United States that I trust that will help you and do everything they can to get you in, you know, into the right situation. If you're looking to buy, it's still a phenomenal time. I have about 5 contracts, I think. So, I mean, literally, you know, it's a great time. If you're thinking about it and you're not sure, and you work for the government or you have a pretty stable job, go for it. If you're in the middle of buying process, stay in touch with your lender and make sure that your lender and you are on the same page about what's going on with your work. They are checking same day. Don't think you can leave your job on Thursday and you close Friday. They are calling the morning of your closing to make sure that you do have a job that day. You know, although things are chaotic, they are double and triple checking that. So make sure you stay in contact.
Okay. And another thing, I think we broached it, but I'm not certain if we said a whole lot about it. If your mortgage is not a government-backed mortgage, meaning if the servicer is not Freddie Mac, Fannie Mae, like if it's basically if it's a conventional loan, right?
Yes, sometimes. I mean, it depends. Second homes, investment properties may not always be backed by them. It really depends on how they packaged your loan when they brought it in. If you're not backed by them, my suggestion is to still call your servicer. They may have an in-house option for you, because at the end of the day, they don't want to lose the money. They don't want to be stuck with a house that they can't get rid of. So the odds are they're going to help you find a way to get through this, especially if you're an investor and your person living in the property can't pay you anymore. You know, just like you want them to work out a deal with you to make sure you stay above on your mortgage, reach out to your renters. Ask them, hey, are you able to pay anything? That, although it may not be the most amazing situation, getting something may be better than getting nothing, because obviously that's less money you have to go to your servicer and say you have in pocket. But at the end of the day, it's all about making sure you're reaching out and contacting the right people. If you do not know, call your mortgage loan officer that helped you close. They will help you find the numbers to the places you need to go. Again, you can always reach out to Sherry and I. We're here to help you in any way we can. We have great, amazing resources.
And if your loan isn't, if you don't know where to go to find out if your loan is a federally backed mortgage, there's a link that I could send to you.
Yes.
And that I will make sure that I get out to everybody that will tell you who your servicer is. And if it isn't backed by, if it isn't a government backed loan, there are other protections that some of the states are rolling out to help individuals with mortgage that aren't federally backed mortgages, loans, and some for investors as well.
I always say start with who owns your loan, because they probably have come up with a plan to help those who do not get the government backing.
Yeah.
So that's my best solution is always work with them, and then go online, Google, right. see what matches up and doesn't. So,
because despite what everybody thinks, mortgagers and banks, they don't want to foreclose. They really don't. They are not in the property owning business. That is not what they want to do. It's actually a whole bunch of stuff, and they try to reach out before you even get to the foreclosure process. They don't just want to, that's not the first option that they want to take. So it's always a good idea. Sometimes I know that it's easier because I've worked with some homeowners before who are facing foreclosure options or foreclosure situations, and sometimes it's easy to just ignore the paperwork and not want to, you know, deal with it, and we can all sometimes become overwhelmed with stress. But it really is important for you to give those people a call because they really want to work with you. They want their money. They want to work with you. They don't want to just, they're not in the property owning business. They don't want to pay interest curtailments, property tax.
Houses are meant to be lived in. They need people to take care of them. They're not meant to sit there for years on end with nobody in them. So yes, I agree. They definitely don't want to have them sitting on their books. And in the end time, that's what ends up happening. The more they have to keep on their warehouse lines, the less they have to offer to clients who are trying to buy. And then they can't extend credit, and then we start running into that cycle. But again, we're not going to be 2008, so everybody calm down a little bit.
We're going to have to do that soon. Why this is not 2008?
Yes, that should be our next step. Why this will not be 2008.
I had a buyer contact me like maybe last week, and they were on my website looking. And they were like, I want to buy, but not right now because I'm going to wait until the economy crashes, until the housing market crashes. And I was like, it might be waiting a while. I'm going to tell you why this is not like before.
Yeah, I think that'll be a good next talk because I see that a lot of articles about the younger group waiting, thinking that we're going to lose 50, 60,000 in value. I know one of my agents had a house that fell apart on closing day because another agent told him that the house is going to be way less in a couple months, which is not true. I mean, I'm seeing appraisals coming in even higher than we expected. I think definitely appraisers are being more cautious. They're not giving away equity like, you probably were seeing a few months back, but they're definitely not, we're not coming in 20, 50, 40,000 low,
Yeah, that'll be our next topic. Why this is not.
Yeah, totally. So are people able to ask questions on here while we're talking?
Yeah, they are. Let's see. Do we have any questions?
I don't know because I'm not sure if I can see, but I'd love to answer any questions.
Let's see. If anyone has any questions, they can pop on.
Just double check.
Okay.
I was double checking. We didn't have nobody texted me in 10. Well, yeah, again, I'm clear to close, powered by Lincoln Lending. We're out of Florida. We love to have all you guys buy second homes and investment properties down here. It's a great time, or just move down here. We have no state taxes. Woohoo! And again, if you have any questions, 757-450-0052. I'd love to answer them for you and help get you in the right direction. Again, have amazing loan officer friends throughout the whole entire United States of America, and they want to help you get into a home, or they want to help you save your home, or do whatever they need to just guarantee we all stay positive, happy, and keep our economy going so that we can get out of this quicker and get back to doing what we were doing, which is, making America great again. So.
And you can contact me as well. I have a great network of wonderful lenders that I work with here in the Hampton Roads area. They will answer your questions, even if you're not buying a house with them right now. They'll answer your questions. They're really nice. They give really great customer service. So if you have any questions at all, you're free to send me a Facebook message. You can text me at 757-744-9267, or you can email me at sherry@parsonsregroup.com, and I'll be sure to get you whatever information you want. So some of the stuff that I just want to recapitulate everything that we've gone over today really fast. So number one, this is not an automatic thing. You have to call your servicer and ask them for information on how to get started with the program. So please call your servicer, see what it is you need to do in order to take advantage of the program. Have your documents in line, ready, and make sure you document the conversation. Ask them pertinent questions like, what happens at the end of this 3 months? Because this is another thing I think we forgot to say. You don't have to apply for the forbearance right now. So let's say, because you have until December 31st, 2020 to apply for the forbearance, and you get one 180-day forbearance. So let's say if you haven't lost your job yet and you can make the mortgage payment this month, and you may be able to make the mortgage payment next month, but then the month after that, maybe you can't. 3 months down the line, you may be able to ask for help, ask for relief for that. You don't have to do that now. It's going to run into your 180 days if you use it before you're actually ready for it. So if you experience any kind of issues between now and December 31st, you can apply for a 180-day forbearance between now and December 31st, 2020. This isn't free money. You're going to have to pay it back. It's not free.
Nothing's free.
Nothing is free. They want their money.
Right. And again, the best thing to do is be prepared now, so you're not scrambling last minute. So you have all the facts. So if you get to the point where you have to do something, you are prepared. But again, refinance is your best option, and it's a great time to take advantage of it. It may really save you, and you can put some good money in your bank account. Don't go crazy with it. This is not when you're done and we're all back in willy-nilly, you can fly off to Vegas and just blow the money. Make smart decisions, invest it, pay off credit cards, get your credit score up, which is another great topic we should get into, is the new credit changes that are coming down the line.
Yeah, with the
FICO scores, because the credit is going to matter even more than it ever did, and there's some big changes coming. But to have just that blanket sitting in your account knowing if something comes up. And again, at the end of the time, if you don't think you're going to use it and you don't want to invest it, you know what you can do? Stick it right back on the principal of your house right at the end and let it, put you in an even better spot. Or have it sitting there waiting. If you do have to forbear, you have that loan payment sitting in your account at the end.
Exactly. So then you can take advantage of it when it's really, you really need it.
Do you want to make one good point?
Mm-hmm.
People out there, if you buy a house, do not buy a house brand new right now. Do not call on your first payment and ask for forbearance. Do not. But people are doing this now, and it's wreaking havoc. And I'm going to tell you, you're going to make some unhappy people, because what you don't realize is when you do that, you cause a EPD, which means the mortgage company has to buy back the loan. They have to pay a fine. And the loan officer that just helped you get into that gorgeous home that you fed and saved their mortgage is now going to have to pay back their commission. So please really think about what you're doing before you do it. Again, if you're having trouble, reach out. Make sure, ask people before you go and do this so you get all the best information, because people are literally doing that right now. They bought a house 2 months ago. Their first payment is now, and they're asking for the forbearance right off. So
absolutely. So if you can pay your mortgage, please
pay it. Please, yes.
Let that be the first thing to do. And then remember that if your loan is not a government-backed loan, or if you don't know how or don't know if it is a government-backed loan, because the mortgage relief protections under the CARES Act is only for government-backed loans, but there may be other programs, and the Consumer Financial Protection Bureau is encouraging other lenders to work with their borrowers, to work with the borrowers to try to mitigate circumstances, come up with it. And then finally, make sure you understand, because like we said, this isn't a forgiveness, you got to pay this back, but this is the CARES Relief Act, and all of the things that we're talking about today talks about the manner in which it is paid back. So it's, do you pay it back all at the end of the 3 months? Is it all being paid at the end of the 6 months? Can I get a loan modification? Can I pay a little bit back at a time? What options are available to me? So please make sure you ask those questions as well.
Perfect.
Do you have any other questions, or you have anything else to input?
I think we came up with some good stuff to talk about down the road. So hopefully, people will watch this and continue to tune in to learn some fun information and to stay on top of it and make sure you're just good Americans so you can continue to buy for years to come. Well, thanks for having me. I had a blast on this. It was fun. And I didn't look as weird as I thought. And I put on pants. So it was a good day.
I got fully dressed today, so I know
it was actually kind of fun to put on clothes again. I was like, oh, this is what it's like to go outside.
I know, and to see sunlight and all that kind of good
I know, even though my lighting, I feel like I'm like, where were you on the night of the 14th? And where were you?
On Investigation Discovery.
Yeah, definitely do not have that whole setup where people do on Insta and look like models every day. So we are real people. You can see it.
So, and I think that pretty much covers it for now. Yeah. Our next topic, we can do why this is in 2008. I think, what's so funny is that because I think that because we worked during that time and some of the crazy stuff we saw.
Oh my gosh.
Like it was ridiculous.
Right.
What we saw during that time is good knowledge to impart to other people.
Right.
So that they could be, an informed homeowner, an informed buyer is always a good thing. It's always great.
And I think that's where I tend to set myself slightly different than a lot of loan officers, is being that I've done literally in the mortgage industry, I've done everything but underwrite a file officially and put together a title package. I mean, I've done quality control. I've done loan mods for Bank of America right when HAMP was ending. We did foreclosures together. Processing, loan officers. So, I'm a bulldog when it comes to your loan. I will not give up, and I don't want to call uncle till I absolutely have to. I will find, if I can't do it, I will find somebody who will help get it done. I just don't give up, where I think sometimes a lot, just say if you can't go A to B, they're out the door. But I do understand that side of the world, and what to look for more so to help that we're putting good, true people into homes. And I'm helping people build and getting them to the spot to buy. I have great credit people that back up, that speak English and Spanish, and they love doing what they do as much and want to see everybody get into a home. I mean, that is the American dream, so.
Right.
Yeah.
Awesome.
Well,
until next week, we'll talk about why this is in 2008.
Yes.
Some of the stuff we saw then. Yes. So.
Awesome. Well, thanks for having me. I hope everybody has an amazing day.
Thank you. You too, Chris. I'll see you next week.
Bye.
Bye.